Boom. We are live and in focus, ladies and gentlemen. We are going to be taking a look at Ethereum today. And I want to start off by ranting about Ethereum 2.0. So we'll do price analysis at the end of the video, so stick around for that if you're interested. But I'm much more interested in the technological part of this conversation, which is unusual. One of the reasons why I first fell in love with Bitcoin was because of it felt like it had a quality of altruism to it, where the community wanted to build things that were ultimately beneficial for other people, helping the underbanked and the underserved. That's what really sold me about Bitcoin, aside from the fact that it was a choice to use a money that wasn't created by a government, and we were all trusting in the math of this new currency or money at the time. Now, Bitcoin's kind of boring. I mean, the price is exciting, but in terms of technological innovation and what's going on in the ecosystem, there's not a whole lot there in terms of the value pull, I guess, to some degree. So one of the things I wanted to go over today was just my thoughts on Ethereum 2.0. So for the last week or two, I've been doing a lot of studying and trying to learn as much as I can. Now, not the best. I'm not trying to learn how to be a developer or a programmer, just have a decent grasp so that I can kind of understand what's going on at a more deeper technical level, and then also share that with you guys as well. Because one of the things I think that's most interesting is now that Bitcoin's basically sitting as our money, the Ethereum and what people are calling the DeFi sector, it's kind of a hype word, but I feel it's kind of a hype and marketing word, but what they're building is feels like a fencing around Bitcoin, and you can do things like wrap this collateral asset, and you have all these multiple contracts that automated market makers, things like Uniswap that came out, and now Ethereum 2.0, which is moving into a mixture of proof of stake as well as multiple layer 2 solutions, so things like sharding and plasma. Now, I'm not technical enough to be able to speak on the individual nuances of any of these things, but I know roughly speaking that things like zero knowledge rollups or these optimistic rollups are using different types of cryptography to effectively communicate with the Ethereum main chain. And one of the things that this might do, and this is what kind of is interesting to the effect, well, first off, it will create a much higher throughput of transactions per second, making the ecosystem itself much more functional basically unlocking some of the more abstract potentials of Web 3.0. Like I, as a content creator, have a bear token, and I could give that out to to the bear family, to you guys via YouTube potentially for every time that you watch or something like this. And there's this new layer of abstraction, and because of the automated market makers, I can take the bear and I can trade it for a Bitcoin, apparently, right? Because there's these new layers of trust that are being built in the background, and they're operable to the point where we can pretty much seamlessly change between one thing and any other thing, which is fascinating to me. I think the DeFi sector is still extremely undervalued and overlooked by most of the bigger players in this space. They've figured out Bitcoin, and this entire ecosystem is just figuring out DeFi. So what I wanted to go over today was, I'm going to bring up some things on the screen here, and I want to give a shout out to the people that helped write these ideas. Just make sure that everything is going smoothly. So I'm going to just kind of shift the camera over here, and I want to start by looking at quickly this paper. It says The Internet Bond, Digital Work Agreements in the Web 3.0 Era by Colin Mayers and Mara Schmidt. Hopefully I pronounced her name correctly, or his name. Anyways. The abstract. The reason why I want to produce this is because it's a higher technical level of the things that I want to share. So it's like a reaction video to what they've written, because it's highly technical to some degree or another. It says, until the invention of the public blockchain networks, it has not been easy for entities or individuals to directly participate or to obtain financial exposure to the base layer of the internet. So again, one of the things we've often talked about is, well, you're never really rewarded as a participant for, being a part of Facebook, Twitter, or Instagram. Their value ultimately comes from the fact that you use it but you're not rewarded for it in any other way other than the product and the service. And this could be looked at as something along the lines of stakeholder capitalism, where you're actually rewarded with a stake in the company just for participating in what it might be. So this is a big deal. Now, I'll skip over some of this here, but what they're introducing is the proof of stake mechanism. So again, for those of you that don't know, it's a consensus mechanism that's leveraging an increased number of blockchain networks, including Ethereum. So what we end up doing instead as well, instead of just, oh, this is gonna make more beeps. I thought I turned my phone off. Are you guys gonna have to watch this in the video? Will I mute my phone too? Probably. These are a bunch of alerts telling me that Ethereum is breaking through price targets. So that we'll get to at the end. I promise it's not that urgent. Come on, phone, settle down. So this proof of stake mechanism allows for very similar security, reduced electrical consumption, and from what I can tell, the potential of a limited supply, which makes the future of Ethereum seem very abstract. And I like where the conversations, and I'm so grateful that Vitalik has gone out and started to do more speaking than in the last little while, because it's very, very helpful. So this proof of stake mechanism is essentially set to launch when they reach the area of around 524 Ethereum. So on Ethereum at the point, it's 32 Ethereum per open each collateral validator. So if you have 32 Ethereum, you can become a part of the proof of stake mechanism. I'm sure they'll have decentralized pools so that if you only have 0.1, you can still become part of this new ecosystem. But it rewards you for participating in keeping the transaction chain more efficient, effectively. So you get rewarded for staking, effectively. It's a fairly common use case in this ecosystem. So one of the things, again, that I think that's interesting here is that this new style of chain is much more focused on Web 3.0 to begin with, right? So, okay, well, Bitcoin solves the money problem, but what about everything else? Vitalik kind of loosely laughed at the idea of, oh, it's boring to have something like Tesla run on a securitized token through the blockchain, right? And to some degree it is. What's really fascinating, and what I was always drawn to by this sector, was the helping the underbanked and the underserved. And where some of this is going is the ease of use and the real cross-border nature of what this represented, and the cost, the reduction of cost and entry into the system. Can you cryptographically prove that you're someone? You know, that we've read articles on people that have been declared dead and they'd come back and tried to prove that they weren't dead and the government didn't believe them. Like, total insanity. So again, what's interesting about this proof of stake mechanism is it's working like, it's almost like you are putting up the side of the trade. So part of the automated market maker, you would put up both sides of the trade. Now this is kind of that, but it's just the Ethereum trade, effectively. So I'm just going to read through this here a little bit more. So every time they launch a deposit contract, these validators can put in 32 Ethereum directly into the protocol. Once that goes through, it will effectively launch Ethereum 2.0 once they hit this 524 Ethereum that's been staked. So if we jump over to this page here, which is a much more colorful version, we can see that they've jumped up halfway in the last maybe 24 hours, around 234,000 Ethereum for the launch to mainnet. So you are rewarded in Ethereum effectively for staking because of the reduction in costs of the gas fees. So here, when it launches at 524,000 Ethereum, it's a 21% APR. So it's very likely that a lot of money is going to put itself into something that's not just a money, but it's a financial, I think they call it a financial primitive. I'm not sure. I'm too primitive to understand if that's what it's called or why it would be called that. But I can make the assumption here that 21% APR is ridiculously high for an asset. So as time goes on, obviously, as more people add to the pool, it decreases because now more people are privy to the share of that effective liquidity pool. And as time goes on, it will continue to dwindle. And at around 10 million Ethereum staked, it's at 4.9%. So here's the crazy question, and here's some of the things I don't know, is Ethereum going into a fixed supply now? Because it wasn't before. It was in a flexible supply. But with this, it might be looking like it's aiming at a fixed supply. I haven't figured that out yet. If you do know the answer to that, please post that in the comments section down below. So if you guys are interested, I'm gonna hopefully be able to do a video on some of this stuff. I mean, there's so much going on right now. We're probably gonna look at maybe trying to help bring other people onto the channel to help produce content because there's so much going on. It's hard for us to share all the things that we're excited about. So tonight's Saturday, video is not just about price, it's about my interest in this sector because it's been rekindled again. I wasn't as excited about Bitcoin because it wasn't doing as much. Not that the price isn't amazing and what it solves isn't amazing, but this technology is revolutionary across the board. It's not just one sector that it can effectively disrupt. And I really appreciate Vitalik's for the public good type sentiment. Now, there's always downsides to this, but ultimately I think that's a good mission. And it's one to be excited about. So this Ethereum 2.0 is set to launch. And I always want to pipe up the Dune analytics here for a second as well. So again, you can see the growth since the 20th of November here. You had 100,000 Ethereum locked in. And then just one day later, 222,000 Ethereum locked in. That's, let's say, that's $125 million in Ethereum locked up. So that pool represents, yeah, kind of like a liquidity pool for transactions within the Ethereum chain effectively. And they're figuring that they need, so the 524,000, if we're halfway there, it would represent it would be $250 million inside of the liquidity pool at launch to effectively. So that $250 million represents its internal trading desk, for lack of better terms. It's kind of like it's kind of how proof of stake works. I think. And again, I'm a layman when it comes to this. So I'm going to be going out and doing more deep dives, trying to get other brilliant people who are building in this sector to come on the show and help explain more of this stuff. I've been trying my best. Shout out to the kernel community and Gitcoin for hosting so many great talks with Vitalik. I watched a bunch of them. I'm really glad that he's going out and speaking more. He's such a brilliant individual. I appreciate that. And then lastly, we're going to take a look at the price. Now, for those of you that know why I like this, you'll understand that what's important to me here is making calm, confident decisions about where we are in the market. So we've been following Ethereum and Bitcoin for quite some time. Now I'll look at Bitcoin briefly because it's our market, kind of our market leader. And maybe I'll even look at Link too, just to kind of end the video off here. But if we go in, when I started the daily here with Ethereum, we've been following this large accumulation range for quite some time. We've already started our bull market. We had our big SOS and our backup phase. Now we've started to break out past the backup phase. We had our first SOS, LPS, SOS, and our final LPS before we started to really break out. Now, ultimately, we're going to see a retracement of some kind. Now, where's the next level of that retracement? And again, guys, the reason why I'm interested in price targets here is just so that I can take effectively grow my portfolio during the abstraction here. So right now, there's two ways to look at this. Boom. This is probably the best way to do it. So here we go. I've used a Fibonacci tool. I've dragged from the top price point down to the bottom of our spring here, effectively our trading range. As you can see, we're getting to the last part of our regression lines, which sit around 540, 570. Once we break out of there, it's a pretty clear shot to 740, maybe even 840. Now, again, with all of this staking and the locking coming up, and we know that this asset's going to start providing its own rewards, it's basically DeFi, right? So I can't express what that means in any short format, so I hope people understand what that means without me having to explain it too much right now. But we will go in and try to learn more, because again, it's something that I'm learning right now. I don't actually know the answer to it yet, but I can tell you I feel it's pretty noticeably important for the entire financial sector to have all of these different tools in the toolkit. So in terms of price right now, we've seen this beautiful breakout. Now this has been textbook. For everyone that's in our private community, you guys got an email saying, here's the SOS, pay attention and get ready for the LPS to come back. I made my primary leveraged entries around 380 to 404. I think this is the last jump here. Yeah, 404. Oh, there it is. This is the last little tail ring out. And I have been enjoying a great ride so far. I started with about maybe 5x here, and now I was in around 6 to 7x leaving 460, 470. So this trade has worked out fantastically for me so far. Textbook, and exactly what I wanted. The point of learning and doing this stuff was to be able to make that kind of trade where I can sit on it. I haven't exited it fully. I've de-risked at certain areas. I put sharper stop losses in when we first went through that area now, and now I just have basically like a trailing stop because it's noticeably in profit. So if I get stopped out on some spike down, I can jump back in. It's probably not a big deal. So far, everything's working out textbook. Now, what's interesting today is that Ethereum actually stepped ahead of Bitcoin in terms of price. So I'll open up a blank version here, and then we'll compare Ethereum and Bitcoin. Sure, perpetual futures is fine. Not too big of a deal. So we want to overlay these. That way we can look at the way their story played out together here. Here's Bitcoin, here's Ethereum. So we have Ethereum in blue and Bitcoin in orange. And as you can see, they were actually following each other quite specifically for quite some time. And then this is the first time Ethereum has kind of stepped outside of Bitcoin's momentum. So here, they were following lockstep up to this point, and they both broke here. But this time Ethereum has actually stepped up without taking a break in this mid-range now. Now, the only reason this is important and interesting to me is because Bitcoin had been leading this last run. Every time Bitcoin moved up or down, Ethereum basically followed in a lesser or sometimes disproportionate movement. Whereas now, today, is the first time that both Bitcoin and Link stepped out of that normal range and started to produce their own movement effectively. So the reason that's interesting to me is because I think that, okay, Bitcoin solved the problem of money. What does Ethereum do? Ethereum does a lot. So much so that I can't even explain it in any short format. So when I'm interested in this entire sector, we've been watching things like Wi-Fi and Aave bounce around, trying to gain a better understanding of what the DeFi sector means, because I believe it's made a big difference. All of a sudden, I'm charting in mostly USDT, which it wasn't happening just 6 to 7 months ago. So there's been a big shift in market sentiment here. And I think it's really important to recognize that because things change. And when they change, they usually represent something new in the market. And the newness in the market right now is kind of the relationship to the idea of stable coins. And the DeFi sector is able to leverage off of some of that stability to some degree or another. And the collateral assets that lie inside of that, ideas like DAI. And anyways, the point is, you take out a loan with collateral with no one getting in your way. It's fantastic. It's really cool stuff, obviously. So my long-term interest in this trade was part of the reason why I kind of like dropped out, right? Like we were trading a bit more of the alternative asset space. The DeFi sector now has become obviously a clear leader, but right now I became hyper-focused on, okay, look, Ethereum is going to represent a bit. We knew we was going to produce something like 70 to 100%, so it was a pretty clear, easy trade. And we knew we were right at the end of this SOS phase, which means there's a high probability that the trade would work out. And so far, it's worked out perfectly. Which is what you want to be able to do when you're trading, is use it to increase your position in your investment. And every good investment firm does that. They're not just buy and hold scenarios. Anyways, so I think what I'm really excited about is to see all this new technology, all these new ideas in the DeFi sector, and now this kind of step forward for Ethereum into what might be a really noticeable wave of upwards momentum for it. I think it is undervalued, whereas, all the big guys recognize that Bitcoin's cool. Well, that means what we're looking for, the things that aren't necessarily cool anymore. I always liked taking mushrooms. Well, they were illegal. I mean, I still like taking them now, but I had my whole life to deal with growing up for people thinking I was a criminal for things that actually should be much more common in our society. So I like the weird, I like the abstract, and I like finding them before everyone else recognizes them. And not that I feel like pious about it, but I just like that experience. I like to find the unknown, the weird things that are might be true, like aliens, all these fun, weird things that are going on in our world. So today's video is a rant, a little bit of price update, my take on Ethereum 2.0 and the fact that we are getting such a beautiful movement out of Ethereum right now that kind of sidesteps what Bitcoin's initial momentum had led us into. So this is T with the Arcane Bear. Thank you guys all for joining us. I had a great time. I hope you guys enjoyed tonight's episode. It's a much longer winded. I think I'm just going to do more rant videos where maybe we just sit and chat about on-screen stuff. I probably won't even edit them. I'll just chat with you guys. I miss going live. And I like editing, like obviously like there's no intro video today, you would have noticed because you watched the beginning hopefully, but I like producing content, so I'm trying to find a way to make it the most value communicated for each topic, and right now I'm becoming more and more interested in what Ethereum can do effectively, which is a good thing. I think that means we might be finding a market dominance for Ethereum. And yeah, so shout out to Vitalik and all the people that have been working on Ethereum in the background and building cool things, cool projects. I'm impressed and I'm really excited for where the future of this brings us. So thank you guys all for joining us this evening. We're diving off and we'll see you again on the next show, probably tomorrow.